This is the final session on the Fireside Chat, focusing on the emerging technologies, what it can offer to the most to family offices. So we have on the panel Ali Madhavji, is the managing partner, Blockchain Founders Fund from Vancouver, Canada. And he manages and builds for top tier startups, limited partner, Loyal VC, Draper Goren Hole. And he is an international economic author, published 3 books. And Amit Grover, founder, MD, Grover and Company in London, currently based in UK, is building up 50 million early stage venture fund, focusing on technology, food technology ventures, alternative proteins, alternative dairy, cloud kitchens, vegan frozen ready meals, and more. Over to you, Amit. Take the lead. Should be a very good interaction, focusing on the technology.
Thank you, Rajan, and thank you for the introduction. Hi, Ali. I hope you got some sleep. Look, I think, to start with, what's really interesting is the technology that family offices need to manage themselves, especially as fund managers, with a very diverse mandate. So, for example, just taking an example, and that probably helped this discussion, that we are operating out of 4 countries, which is New Zealand, Australia, UAE, and the UK, with very soon that we are going to go into Singapore as well with an operating base. Now, when you're working with a diverse set of geographies, and obviously your mandate is investing in a large, significant amount of ventures, management, and both from a perspective of management and performance management becomes a very, very important aspect. So, I kind of break it up into areas of obviously venture recruitment and LP recruitment if you're running kind of a fund or a family office, assuming that somebody is running a multiple family office. And then obviously, going down to recruiting ventures and managing ventures. Now, in this time period of COVID, where we've all been kind of restricted to our computers and our own 4 walls, and one hasn't been able to historically conduct business, traveling, meeting people that once we did before 2019, I think that's kind of changed a lot of things. Interestingly, between that era of, let's say, previous to my, becoming a fund manager, I was running a consulting business for the 14 years. So rewinding back to February 2020, I was running my consulting business. I went for a meeting to New Zealand. I was back on the flight from Auckland to Dubai, which is a 19-hour flight. And the moment I got here, within 3 days, the whole world went under lockdown. And that kind of changed a lot. And that kind of also forced me to open this fund, because we had to think out of the box that, look, nobody's doing any international business anymore. So that's when I kind of started interacting with the investment community to recruit LP, with the venture community across 4 countries to be able to recruit the right ventures. And I've found, both in terms of recruitment of LP and ventures, interacting with them regularly, I've had to use technology, fortunately or unfortunately, to conduct and kind of build this fund. So I think I'm a living, talking, walking example of sitting on the computer and trying to pull off something that people thought that this is ludicrous. You can't. I mean, what do you mean that people are going to sign you a check and kind of give you? I'm like, look, this is the new world. So people don't have a choice. Neither can they travel, nor can I travel. So, I mean, it's got to be dependent on technology. So from, cloud-based platform that you use to kind of conduct your due diligences, to exchange documents on various platforms, encrypted in nature because you're dealing with sensitive information, to, business analytics on platforms like, you've got Trackfin and you've got other platforms that give you information both on an industry and a sector basis to be able to map some of your investments that you play in the sector and some of the big divestitures and the big acquisitions that have taken place, and also kind of noticing some of the valuations that are going in that specific sector, right down to the forensics. I mean, when you obviously doing due diligence is a very important part of investing. And, we've had to depend on a number of platforms. Being obviously a small first-time fund, the chances are that you can't afford a Deloitte or a PwC and spend most of your money kind of doing due diligence. So we've had to depend on platforms to kind of have a preliminary due diligence and analysis of those companies that you then drill down deeper through your professional networks, social networks, the grapevine, and so forth and so on. And then, of course, the digital meeting platforms like Zoom and Teams and so forth and so on, like we are currently on, to kind of conduct this. So I've kind of personally noticed that it's been a very effective journey, both in terms of recruiting LPs and recruiting companies, as well as putting the whole structure through literally digitally, from starting fund in the buy to getting the people in to invest in to getting commitments in. Honestly, I completely attribute technology to be able to empower me to do this. I mean, of course, I'm not saying that people don't know of you. Of course, they've heard of you. Some people worked with you in the past. You're well known. So, what's your take, Ali, on how technology is kind of playing an important part in management of both venture performance and venture recruitment as far as family offices are concerned?
Yeah, it's a really, really good question, right? And I think the way that you framed it on on how the world has changed, or you could say accelerated, over this period in this direction, I think has made a lot of adaptations in the way that we work, right? And same with even how startups operate and the startups that were able to adapt and thrive. The startups that adapted thrived, right? And so I think it's important to know in terms of for family office. I think there's sort of two parts, right? I know you mentioned sort of multi-family office. There's sort of the aspect that some startups are sort of managing a number of investments in other funds and trying to track performance sort of in that way, or they're actually making investments directly into ventures. And when you look at that, there is a number of different tools that can be used. There's a lot of different sort of tools you can use from a CRM perspective to managing sort of performance and deal flow. There's you're going to of course be getting a lot of information from different fund administrators or different startups on a monthly basis, bi-monthly basis, that sort of thing. I think it's important though, sort of in addition to some of those technologies for deal flow management, managing sort of deal flow compliance, et cetera, to also though be looking at, how are you putting in and attracting some of this more unique data, because you don't always get, everything that's shared with you, right? So, looking at certain metrics that are a bit more objective. So from, stuff like Google Analytics to segment data on how customers are interacting with it. I mean, that's going to be, in a lot of cases, depending on the type of company, can be even more valuable on future decision making when you start seeing some of these trends on what's actually going on and how are customers interacting with it. How much do people like the product, right? Like, especially in a tech-enabled world, these are more and more important because this is sort of some of the key ways that people can interact with your product or company. Of course, when you're analyzing from a fund perspective, there's going to be a lot of different things that you can do. But I think one of them that I would encourage is actually getting out of your comfort zone and talking to different fund managers around the world. I mean, I think it's pretty clear that capital has started to move more global. There's less of a concentration in certain cities and places as there used to be before, right? I mean, you can already see sort of a lot of the capital and talent from, say, San Francisco and Silicon Valley is now expanded across the US to other major cities, even spread out across the world in certain cases. So, you're starting to already see a lot of this trend change, and seeing sort of how to sort of get out of that comfort zone, see what's actually happening with different managers. Of course, I think you do need to still look at reputation of the individual. I mean, because there's obviously some people with bad intentions, and so making sure that you are talking to people that have good reputations, that are known in their communities, et cetera, I think is still an important part of that. But then even taking a little bit of time to track how things are performing before investing in it, if there is that luxury, right? Because the time at the end of the day, if you have the luxury, is the best test of time, right? So get to know someone, see how things are going, see the updates, see how, if it's a startup, see how things are progressing over a few months, is generally, I think, uncover sort of most truths, and gives you sort of the most insights when you have that to your advantage.
No, that's really interesting. I mean, on the deal flow side, we've seen obviously platforms come on, like, from my case, I've been a part of Cedars, I've been a part of Beyond Animal that Claire Smith founded to kind of, accelerate the native food kind of industry, which is a similar platform to Cedars that connects ventures with investors online and, offers you a list of services that you can opt in terms of preliminary due diligences, a basic track record. Some of the areas that you maintained give you a flavor of who you're dealing with. And then obviously you dive into detail of each of those areas if you get interested. So I've kind of been a part of many of those platforms. What do you kind of think about fintech platforms that are coming up? And there are hundreds of them. Trust me, I get these emails every day that list on my platform. This is great. We're connecting ventures with investors. And, there's only that many platforms to go around and that many investors to list themselves everywhere. So what do you think, what do you notice when the kind of trends on fintechs are kind of coming out, connecting people through a platform to transact? I mean, what are your...
Yeah, it's a very good question, right? When you see how many of these platforms out, which you alluded to, I think it's there's sort of a good side and a bad side, right? So the bad side is it's going to be highly fragmented, right? Because not everyone's going to be on 100 different platforms. Everyone's maybe on one or two or three, and maybe you and I, because we're full time, always looking at ventures, are a bit of an exception. We're probably on more of them, but this is a big problem then, because you're missing out on major amounts of deal flow. I think the other thing that we've seen with some of these platforms is it depends on how they attract startups, and are they charging startups, or sort of like looking at the business model as well, because sometimes I find with I don't know if you find the same thing, but the quality of startups aren't very good, and there's not really a bar for any filtering that's sort of going on, which is okay if it's just sort of a bit more of a platform that you can go on and sort of see and sort of go through yourself. But if there's too much noise without any filtration, and say this group is making a lot of introductions to you, then it can start to start filling up your inbox as well with companies that are sort of substantial low par of quality that you're looking for, or stage, or other sort of metrics, right? And so that's sort of one of the problems. I do think this is where, for a family office, there's a big advantage in finding good fund managers, because this is not something that's extremely easy to do unless you're full time looking at this stuff, sifting through it, understanding sort of where the nuances are, through these different platforms, through analyzing these different companies, because there's so many deals, so much deal flow right now. And you've got a very strong reputation. I'm sure you're getting all sorts of deals that are sort of proprietary. It's very similar with us as well, and that also takes that reputation building and other aspects. So you're not only getting this deal flow from these platforms, you're getting from these other angles where people are aware of you, startups are aware of you pretty early, and are sharing that with you. So I think that's something as well where, for family office, it makes a big advantage to then see which fund managers make sense, and have those connections and have that reputation to really go out and find the best deals and filter through this stuff without having to do it yourself, because then managing all of this is definitely a full-time job. It's not even a full-time job for one person. I mean, it's a team that's sort of needed behind this, right? Just want to, but you're on mute. Just if you want to unmute.
Yeah. No. So I mean, in terms, I completely agree that it's been quite a task. It's taken me literally 14 hours a day for 9 months to go through to find 200 companies in 14 countries, speak to each one of them and each of those founders on obviously Zoom, and then kind of share WeTransfer files that are highly encrypted because you take the highest package that gives you a certain level of encryption. I'm not sounding the very confidential documents on national security, of course, but still for a company, they're quite kind of important, and then kind of put them through that whole process. I completely agree with you this full time. But what I really realize, Ali, this is more of a hybrid platform using technology to do your initial work, but you still need to rely on a lot of offline methods of understanding what you're getting into, who you're getting into bed with, whether they have the skill, the ambition, the passion, and all the other ingredients to grow ventures in. Do you really see this trend going to a full-scale digital and online mode at some stage? Because look, as far as I'm concerned, the world's not going back to 2019. Many of us think that that's going to happen after the vaccinations, but I can guarantee you this is a new world we are living in. If we don't embrace in the entirety, people are going to struggle to be able to operate very efficiently. Like, for example, once in my category, when you build brands, food brands, one would flock to the supermarket, and that would be the traditional method. List in the supermarket, do your promotions, reach out to customers that the supermarket services, and that's how you build a CPG brand. Gone are the days, because people can't go out, people are not visiting retail. Direct-to-consumer models are big. E-commerce is big. Experiential marketing, Insta and other platforms are big. And I think the whole way consumers experience and purchase, given the fact that how COVID is changing, I mean, it's actually accelerated us far beyond the digital revolution that we were meant to be in 2019. So I'm seeing a drastic change in consumer pattern, how business is done across the globe, and how things are. For a start, when things come back to normal, hopefully normal, like we call it, after the vaccinations, I think you're going to see a drastic cut in travel. I mean, where you needed four flights, you're going to do with one, because most of your stuff is already happening online throughout the pandemic. So do you see this hybrid model becoming a full-scale online digital model eventually, or do you think that this is going to remain a hybrid model for years to come?
Yeah, it's a good question. I do think it's going to be somewhat hybrid, but I think it depends on what parts, right? So I agree that business travel has probably changed forever. I do think that companies are going to cut back on those travel budgets pretty significantly. I mean, there is certain cases where I do think in-person, deals, meetings can be helpful, especially, for some of these longer term relationships. So there's still some, but it will be cut drastically from, what it was before the pandemic. I think retail travel is maybe an exception. I think there's a lot of pent up demand. I think people are itching to travel. And perhaps might even be the best travel year in history of when the pandemic is done, from a retail perspective. So we'll time will tell, I think, on that. But when you sort of look at how that shift is changing, I do agree that you have to embrace it. I think the example that you gave is really, really good. It's transformed for CPG brands, for example, and I think what we've seen directly in our portfolio with our startups, because they're typically fully digital in nature, when the pandemic hit, nearly every single one of our startups actually did better. There was a very short period where, there was a lot of uncertainty and people didn't really know what was happening, but very quickly that sorted itself out, resulted in substantial increase in sales for a lot of our companies, increase in interest from an investment perspective, et cetera. And this was actually very, very positive, for our portfolio. And so, we are seeing that, I think, firsthand. I do think companies are going to remain and need to work remotely, or semi-remotely. You're going to see some offices, start to open back up, but they might not be fully sort of open, or they might even just give flexibility. That flexibility now is required by workers. And I've heard these conversations even in with large multinationals, and it's, to me, still unclear even, who's going to be in the offices, who's going to be working remote. I mean, some people are saying if you've got a family, you want to, work remotely so you can spend more time with your family. But, if you're a millennial or Gen Z, and you're just in the sort of starting still of your workforce years, you might want to be traveling in another country if that's permitted, right, by your company policies. So I think it remains to be seen fully, but I do think it's going to be quite remote, and teams need to get more and more comfortable with that environment as well. Yeah.
No, I completely agree with you. I think that multiple fronts this change is happening. The first front is obviously cost. Like you're saying, large multinational companies like the big account. I mean, take the example of the big accounting firms, that employ thousands of people. They've got millions of dollars of real estate on rent. And they've realized that without compromising productivity, actually, to my surprise, people have been more productive working from homes during it than in your office, meeting for coffee breaks and going down for a smoke or, whatever they're kind of doing. So I think from that perspective, cost savings purely to get real estate out and only maintain a skeleton structure that you need to come in to meet a very important or a business center at use or a Skype conference that is kind of confidential. Even that's now getting addressed with, private webinar chat rooms that are highly encrypted. So I think from that perspective, that's a cost element. On the social behavior perspective that technology is changing, I think family offices or investors or impact investing is kind of taking a 360-degree turn. That's kind of told you that you can be sitting in, Iceland, for God's sake, and rarely transacting business across the world because things are getting more and more digital. Move of information, due diligences, and all that, except for the comfort factor that you need to get with the individual that you're going in the bed with. But I think most of the other stuff is quite handled digitally and quite well at that. I think what also I'm seeing the change happen, and this is really going into the crypto space, that, once, which was very attractive to, mine Bitcoin and other kind of cryptos coming across, now governments have realized it's an amazing opportunity. And this is an opportunity to pivot from having your physical currency to a digital currency. Like in India, there was a huge initiative on Paytm that everybody was using. And I think it was one of the most successful large-scale implementation done by the Indian, supported by the Indian government and developed by private people. And that's worked absolutely fabulously across board. I am seeing that kind of leap into areas where governments' currencies will become crypto. So the way the sterling or the dollar looks like today is probably going to look like, in 5 years down the line, a cryptocurrency, where governments are going to back that. Do you see that happening in terms of the face of wealth really changing? And that comes to a second act, that when you're transacting these days, I mean, honestly, mate, living in Dubai and London for the last 2 years, I haven't taken out a credit card. It's all Apple Pay. So I am seeing this as the new normal, where you don't have the plastic anymore. Everything is plugged into your mobile phones. Even you transact with ventures and whatever you do, it's all a digital world. You ship your product, you get your online payment, you pay online to your vendors. So I think the physical exchange of money, as once we kind of saw it, is diminishing by the year, by the quarter. And I think it's just a question of time, Ali. It's going to be history. So I'm seeing a complete digital shift in the way investors like ourselves both invest money and get our returns. Because end of the day, all returns are really nothing but paper exchanging itself. Valuations getting built by banks and banks exchanging paper. So I think, I'm seeing this whole digital shift happening at a much wider ecosystem than it ever was. Do you see that in your?
Yeah, absolutely. I mean, we've been pretty focused on tech, enabled companies that are highly scalable, and so for us, I think that's a part of the trend that's sort of at the forefront of this change, and sort of the greatest sort of some of the greatest returns sort of out of that, right? When you look at the sort of trend from cash based, to digital to maybe digital currency. We've already been on that trend, right? A lot of this was already starting to change. We weren't using physical cash, we were using credit cards. Now this is sort of the next step. I mean, CBDCs, I still look at a bit more similar to fiat currencies than to cryptocurrencies. Although there is going to be, certain differences and advantages that central banks can sort of extract out of these new solutions, everything from data to being able to put on certain restrictions directly into the currency and its usage, that'll be enabled by tech. So governments though are starting to change. Governments are generally the slowest ones, except if you're in some of the more innovative places like the UAE or Singapore. And I mean, India's also had certain aspects where they've been more innovative on this, and China, etc. So it is interesting to watch, but in most cases it's led, I think, by a lot of the corporate change that you're seeing, right? And an example of that would be, when you look at governments and government waiting times for any services, it's substantially, I'd say, in most cases, slower these days than it was pre-pandemic. And I think they fully haven't gotten everything together. In a lot of cases, you're seeing botched rollouts in a lot of countries and blaming it on COVID. Depending on where you are, some countries are doing a great job. And so, part of this, I think, is they're still not comfortable with, remote working environments and sort of this new norm happening. Whereas I think a lot of corporates, as you sort of alluded to, actually got the hang of it, fairly quickly, because they've got to run from a more from an ROI perspective, where they're measured maybe by external shareholders or things like that. So, I mean, I think, looking at that, though, we're seeing this trend, as you said, accelerate. And, I think it creates an exciting opportunity, though, I think, from a family office perspective for investment opportunities in this. And then you pair this change with, I think, technologies and shifts, right? So, I think on your side, there's sort of alternative meats and alternative, proteins. There's, what's happening around ESG and how front and center that's becoming. And you're seeing that more and more, and not just from a do good perspective, but I think even more so from a return perspective. You're seeing some of the biggest companies in the world have more of a focus on this now. You're seeing a lot of the biggest funds in the world, start to value this. And I think that's really, really important. You're seeing technological shifts from AI, IoT, blockchain, and we're really looking at this and seeing, where there's these convergences of technology, they really start to accelerate and become exponentially more beneficial. And that's where I think there's tons of exciting opportunities to outperform, public markets and things like that, from exposure to these sorts of asset classes.
Another thing that is very, very important to both, I mean, like us, who invest, is I think the analysis part of it, the financial analyst, that are highly lucrative and highly desired because they can value companies, they're experienced in doing that. Now, a lot of AI is playing a very important role. I mean, look at the historic pitch book that gives you information on what stocks are outperforming, what are the new trends, and then look at a platform like Traxon that picks up information from platforms like PitchBooks and does a algorithm-based calculation of your expected returns and gives you a position what they feel that, whether it's highly desirable or not that desirable. Now, those are business intelligences shift happening in the market that is kind of bread and butter in a way to evaluate companies and to invest in companies. And as a result, kind of piggyback on these platforms to be able to do that function, because it's a yearly membership versus having somebody employed for hundreds of thousands of dollars. And, it's kind of a pre-programmed. Do you really see the shift in terms of business intelligence with artificial intelligence moving into a direction where literally, one could avoid with 90% of the staff, which is centric around financial analysis in our sector? Do you really see that this is going to take over?
Yeah, this is a very good question. And I think it depends, right? So it depends on what stage you're at. So if for us, we're at quite early of a stage when we're looking at companies, generally between 1 to 10 million primarily in terms of valuations. And so a lot of these companies have, very little to no revenue. We still have 90 different things that we're looking at sort of internally, but a lot of these aren't fully quantifiable numbers or things that you can extract from them, just filling in or getting from public data or anything like that, right? And so this creates some challenges when you're trying to use machine learning or AI to sort of analyze some sort of data and help you come to a conclusion. We are looking at where we can use machine learning on certain historical decisions and using that for certain sort of insights. But I think having said that, it is more difficult at an early stage. I think with public companies for sure, right? I mean, that's sort of an easy one. It's already being done for a long time, right? You're seeing a lot of hedge funds, et cetera, use this sort of stuff and have pretty sophisticated models. In cryptocurrency markets, you're saying the same sort of thing. We have companies that use machine learning based trading for spot and futures markets. I think there makes a lot of sense. Now, when you take larger private companies, so starting to look at Series A, B, C, D companies, still difficult because you don't get all the information that you want. I think there's certain things you can start to access and certain insights when you can start to compare them to competitors. Depends how many of those competitors then are public, right? Or what sorts of data you can find. Can you actually find comparable data? And these sorts of things, I think you can start to do, but it's still a bit fragmented depending on what sorts of data you can get. If it's alternative proteins, for example, is a fairly new industry. There's not a crazy amount of competitors that are public that you can acquire a lot of data from, right? Having said that, if you look at other industries that have a lot more players that are public, then it becomes easier because you can start comparing and finding, patterns and where the industry's fully at, et cetera. So I think it still depends. But having said that, I mean, a lot of it is not always about current numbers, right? There's still this intangible aspect of, the founders and the team, and can they build the culture that's going to take this from $100 million company to a $10 billion company, or those sorts of aspects. And I think that's very important because sometimes these companies can even be really hot deals, hard to get in on them. And that doesn't mean that because it's potentially slightly overvalued at its stage, that it's not the better company to go into because, they might have the better team and the better culture and the better plan on how to execute on that to grow into and exceed, expectations or valuation versus a player that's, more stagnant, not innovative, but maybe has a more favorable valuation, certain data metrics, right? And so that's a little bit more of an intangible in some ways to look at and get a feel for than purely say numbers that, an AI or machine learning based model can analyze.
I completely agree with that, Ali. And I think I've found that in my own analysis that I also deal with a similar profile to yourself. So most of them are early stage, probably between 1 to 5 million in valuation. And most of them are an excited bunch of entrepreneurs who possibly don't have a business experience before. So it's an interesting bunch of young kids that you by and large work with. Now, what I've kind of found, while this journey, like, for example, in New Zealand, there's this company called Weirdly that obviously recognizes the intangibles, and they've kind of devised a psychometric analysis that they've been using in the pandemic as everybody's been in the lockdown to be able to service venture selection and entrepreneur profiling, and really it's kind of a psychometric test that gives you questions and scenarios to really judge your cognitive abilities to be able to react to certain business situations in the way that you're going to handle it. Are you a team player? Are you a leader? Are you going to go and take advice if the time comes? What do you think the emergence of those kind of platforms that are using machine learning at one end of it and then putting the intangibles or the rather variables that are not numbers on the other end and trying to kind of get some kind of...
It's a good question. I think we're still 5+ years away from really being able to extract all the value out of this. Now, we actually use some of these tools, by the way, to give you an idea. However, we don't use it for determining which companies to invest in. We actually use it for which companies to not invest in. but
Oh,
it's
great.
not actually the companies to invest in. So it just helps us to cut out certain red flags. And the reason is if you think about it from a machine learning and AI perspective, the thing is it's all about data, right? And so what we actually need, and this is why it might even be more than 5 years, what we actually need is the last generation and the generation before that of great startups to have all of their executives have to have completed it, but they didn't, right? And so now what we need is we need this generation of great startups over the next, say, 10 years or 5-10 years to all do this. And we see who actually, became unicorns, who didn't, right? And see if the computer can figure out patterns and insights that translate into a higher likelihood of success, right? And then that doesn't even guarantee that all the right questions were even asked in the first place. And if it wasn't, that cycle sort of repeats and needs to refine. And so this is why I think it's hard to use these things fully as a way to replace decision making from the fund managers, and it's just not that simple.
No, I couldn't agree with you more. I think, in the recruitment side, trying to hire people probably gives you a more, greater understanding of the person that you don't want to hire, like you said, rather than who you really want to hire, because there's so many soft aspects to that. But do you think for investment management and, for really when you're recruiting ventures, managing LP expectations, what are the biggest opportunities and trends as far as tech is concerned that you feel that is going to be prevalent and relevant for investment managers and fund managers like ourselves? What do you think in the next 5 years are going to be the biggest opportunities in that space?
It's a good question. I mean, I think what we're looking at is, I think part of these these trends that we've talked about earlier with a lot of these platforms emerging, more access globally to deals than ever before. I think all those things sort of come into it, but we also see it as more fragmented in some ways than ever before as well, right? Because there's just so many of these platforms. There's not a clear place where a startup should go in reality. Like, sure, there's certain that are maybe a little bit more well-known. Like you could say Crunchbase, once you have raised money, maybe better to sort of, put data on, not all startups are doing it, et cetera, though, right? And so I think there's a lot of fragmentation, and this means that, for a fund manager that's trying to find the best global deals or sector deals across the world, this means that you've got to really plug into all of these different ecosystems and then figure out how you actually now sort through substantially more deal flow effectively. And obviously given the time constraints, because you're looking at more deals in essentially less time, you need to do the same or more due diligence than on the deals that are interesting. And so this adds, quite a lot of challenges. So these are some of the things that I think adds more challenge. I mean, I'd be curious on sort of your thoughts around this part as well, and maybe even around the start where you mentioned on how you were able to raise capital. I think it sounds like an interesting story in how you were able to raise capital effectively over the pandemic.
I think, to wrap up that, question and the session, I think for me, the broad factors that are is that it's explicit and tactical, right? Knowledge. So a lot of that which can be addressed through technology in terms of analysis and the broadline information is going to be powered through tech. But like you say, there are a lot of hardline information where you're assessing people, what venture invest and what to not invest, would have to kind of depend on experience and previous exposure. So that's where I kind of, it's going to be a hybrid model working forward, where the model will tip to technology as the time passes, and when technology answers a lot of issues that it can't answer. As far as my own experience is concerned, raising capital, like I tell people that we are still yet to form the fund because we are waiting for our license from Dubai, DIFC. So we are obviously got soft commitments. So the way I've done it is the historic, old-fashioned way, Ali, reaching out to potential investors, marketing my credentials. I come from 24 years of CPG experience and with a mainline consulting experience with companies like Boston Consulting Group and so forth. So I've been in the market for over 25 years doing my thing. And obviously big networks in Australia, New Zealand, and Dubai and UAE. So I've obviously depended on my own network and the grapevine with friends and colleagues putting me in touch with the right people. And that's helping. It's taken me over a year and a half to raise soft commitments that are kind of seeming like that I'm going to be well oversubscribed. Now, obviously, the proof is in the pudding. So end of the day, when the fund comes on, let's see how much of these soft turns into hard or everything turns to shit. Who knows, really? But I mean, the idea is there is no shortcuts to do it. People have got to know you. You've got to have networks that speak highly of you. And everybody understands in the pandemic that you can't travel and take a flight and meet people. Everybody's scared of getting the COVID. So I think people rely on a lot of your past experiences and your credentials that they cross-check from common people that they know. That's how I've been able to do it. I don't know about others, but that's how my strategy has been moving forward. Yeah. So let's wrap up. If there are any questions by any attendees, we'll be happy to take. Rajan?
Yes, good. Yeah, it went well, Ali. Ali, Amit has taken out good. He got the market.
Absolutely. No, I think that was fantastic moderation.
An excellent moderator. He is an excellent moderator. I found today with my experience. And so, Ali, we have it the UK session where he had the US. He's a cybersecurity expert. He will be with you. Fireside. Not Amit. I'm talking about Ali. Amit, I will discuss with you regarding your session after some time. Okay.
All right. No problem. Just message me on WhatsApp, Rajan.
Yes, yes. So thank you, Ali, or Amit.
Thank you
for making this presentation very good. And we end here. Look forward.
Sure.
Okay.
Perfect. Thank you.